Hey everybody, Trendy John here from Simpler Trading. Let's get started with this week's broad market analysis. It is the 1st of June. We only have about 28 days until the quarterly candles close, so we'll be going over some of those candles, what I'm seeing, what I'm looking for coming into this week. Before we get started, go ahead and hit the like button. And if you are using this and it is helping you, please say so. Give us some comments, keep me going, give me that energy. It's been amazing, really, and a lot of traders are probably wondering, will it continue? Will the trend continue? And there's just this one line, one level that if we can just get over, I believe we will make all-time highs. But we also want to talk about the support, right? So anyways, let's get started this week with our US economic calendar. And the reason why we go over this is because we want to understand catalysts in the market that can create volatility. Now listen, this is important. I don't sit on my hands. I just want to be aware of these catalysts because these catalysts can push price into those levels where we want to either get long or short and so forth. That volatility dial turns things up and nothing changes. That's what I'm always really preaching here in the market is that your levels are your levels, and if you got great levels, you have to trust them. These catalysts just push price there quicker, so you need to be aware where your levels are before price gets there, right? And that's why we're here to be, on a Sunday before the market opens so that we know where we want to react and so forth, okay? So today is June the 1st. You guys can see that. And we do actually have some Fed speakers coming out a little bit later. And there was one that's already spoke here. It looks like President Mary had a TV appearance, and then you have Christopher Waller speaking tonight, and these are Eastern time. And then tomorrow, to get our week started, we have S&P U.S. Manufacturing PMI, and then we have Dallas Fed President Lori Logan speaking, and then we have Chicago Fed President Austin Goolsbee, and then Federal Reserve Jerome Powell, the man, Jerome, the legend, coming in at 1 o'clock Eastern time. So this should be fun. Maybe he creates some sort of big catalyst in the market. We'll find out soon. And then we have some auto sales coming in to be announced. So on Tuesday, June 3rd, we have factory orders, job openings, and then again, some Fed heads speaking during these times. And then Wednesday, June the 4th, we have ADP employment, a few, again, some Fed speaking, S&P final US services PMI, ISM, and then the Fed beige book coming in towards the end of the day. And then on Friday Eve, we have initial jobless claims, U.S. trade deficit, U.S. productivity, Federal Reserve Governor Adriana, and then again, Patrick Harker coming in. Friday, June 6th, we have U.S. employment reports, unemployment rate, U.S. hourly wages year over year, and then to top it off, consumer credit. So we have some stuff on the list, guys, including our favorite man, Jerome, who's going to be on the mic tomorrow. So please, please keep that in your thoughts while you're trading. Okay, let's go ahead and move on. The next thing that I like to look at is going to be the earnings calendar, and we can see here that we have some names that are popping up here, at least that I'm interested in, like Dollar General, and of course CrowdStrike. I bought CrowdStrike on the dip last year, and it was a perfect buy as my equity is close to about 90% right now. And so I'm definitely interested in seeing how they report. But I also, a few months ago, did a webinar where I showed you how you can trade into earnings and kind of like hedge yourself and things like that. That I really like to use. So I might be interested in taking a trade in CrowdStrike. So we want to tomorrow afternoon be looking at CrowdStrike, looking at our levels and seeing if there's a potential great trade to trade into earnings. On Wednesday, we got Dollar Tree, and then we have Five Below, and then moving down here on Thursday, I see ABGO or Broadcom. We have DocuSign, Lululemon. I'm definitely interested in see how they do. And then moving over into Friday, there's just not a whole lot on here. as things are starting to wind down as we're getting closer to the end of the quarter. Okay. The next thing that I want to be looking at with you all is going to be the bigger picture, and we like to start with the quarterly candle on the SPY, and that is here. And then I like to give you a couple notes. On this past week, bulls held the previous lows, but unable to make a new high. There are 29 days left in the quarter, halfway point for the year. And this is kind of interesting, but price above the 586 level, we're at 589. Um, sets up, and again, we got 6 months to go, but is a possible three white soldiers formation on the yearly. And we can look at that here towards the end of today's video. But just know that if you were to change these candles to 1 year, representing 1 year each, you'll see that we are in the continuation phase, if you will, of a third candle. So very interesting. The year could be very, very robust, if you will, to the upside. But again, that 586 is basically the over under for that to take place. Price below the 586, and it's an inside year. So that's very interesting. So if we were to close under 586 by the end of this year's candle, it would just be or set up as an inside year. Support of this quarterly candle, guys, is coming in at 569 by 550. Basically, all I've done there is anchor my coefficients or my secondary fib levels. I'm just measuring just this candle by itself, and that's how we're coming up with the support. And I'm also using the primary Fibonacci 23.6 as the bottom end of that support. So I really like this level, and as long as prices stay up there, I am extremely bullish. Okay. Notice that we've come up and tapped the yearly edge several times. So I'm going to bring you over to a weekly candle here. And this is what this looks like. And I want to talk about the weekly really quick. So price is above the cloud. That's the first thing. Candles have moved from red to white. That's the second. Measuring the gap, so I'm placing my anchor or my coefficients right on top of that body there to here. So when I'm doing that right there, price remains in the extreme trendy bull channel. So that means above the 23.6. The upper yearly edge has remained resistance. Okay, and we can see that it's tested 1, 2, 3 weeks in a row. I would expect something to happen this week. We're either going to get above it, and I believe we are going to make a new high if we establish a base above here. Going back and doing my own back testing since the inception of the market, typically a base above here gives me a 95% probability we'll see an all-time high. When I say all-time high, I just mean simply over this number. It could be 613.24 and come right back down. So I talked about this level, and this level is very, very important, not only for the trendy methodology, but I believe for the market to see a continuation. It is resistance until proven otherwise. Going into this week, your major levels for the SPY, okay, to the upside are 591.5 by 593. And what I'm doing is when I come over to a daily, I'm using your weekly edges, which is the yellow, and then I'm using that yearly edge, which is the blue. We call this a double stack. So we have two edges that are on top of each other, and therefore they are resistance until proven otherwise. And when I combine them, it is 591.5 by 593. Know that that is your resistance, and if we get above there, things look really good. You guys can also see here on the daily that we have the 200 SMA, which is this blue dotted line here. These areas in here, I would expect to be support until proven otherwise. When we zoom in, your lower weekly edge is there, and then we have that synergy with these here. So if we were to pull back, I'd be looking for a first level, I guess, of entry would be in this area. Don't want to stay there too long because there's a part of me that would like to see a little bit further down before we move back up. So like if it doesn't work, say for $1.50, $2 a risk, then I'm just not interested and I'm looking for prices to go further down. Okay. So that overall is my SPY analysis on this chart. Okay, my overall sentiment for SPY and the ES futures is going to be neutral. And the reason why I say that is because, again, we're not above this level, and I need to see us above that level. Okay, now when you look at the trendy banners, you guys can see that the weekly was bullish, the monthly is extremely bullish, and the yearly is super bullish as well. So the overall trend is to the upside, but again, need to get over this big level. Let's go ahead and move on. We are going to go to the Qs, Q, Q, Q. We are going to go to the bigger picture. And as a reminder, if you're listening to me right now, you can go on to YouTube and hit your cog or that little button and speed me up. You don't have to listen to me at 1. You can speed this up to 1.25 to 1.5. I'll sound like Alvin and the Chipmunks, but it really goes through, if you can digest it, me speaking a little bit faster, it makes these videos a lot easier for you guys to get through and not have to spend 30 minutes or so. Okay, just something to think about. On the Qs, let's go to your quarterly, which is right here. And again, just some simple numbers for you. The weekly closed as an inside and up, and I'll show you that here in a second. This is a confirmation of strength. However, price will need to get up and over the weekly and the yearly edge. So same story here, except they're flip-flopped, and I'll show you that here in a second. For continuation, the two major levels this week are 522 and 525. Okay, quarterly, let's go over it really quick. Your support, if you just come up here and measure the candle that we have currently, find your Fibonacci levels that I've taught you in your class. This is going to be my support for this quarterly candle from a primary. Okay, just concentrate over here on these fibs. From a primary standpoint, we are moving to the upside. We came down into the golden pocket or near it. We got that really nice bounce. We came into the trendy edge. We got that really nice bounce. We're above the 9 EMA. This is a beautiful hammer candle, but we're also 29 days out and anything can happen. I've seen candles like this go all the way back down, come inside. I've seen them explode to the upside. Basically, what I'm saying is we still have 29 days. Anything can happen. Okay. Let's move over here. You guys can also see that the upper trendy yearly edge has also been a thing of resistance. And so we kind of fall into the same idea as that I was showing you on the SPY. Here is a weekly look at it. A couple things that I would like to point out to you when looking at this on a weekly is price has created an inside and up formation. We have our body, an inside, and then we go up. We also can see that there's a color change. We've went from red to white to green. Okay. We can see that the yearly edge once again works really, really well. And you can see that the yearly edge right here is working really well. So it is resistance till proven otherwise. The gap up is holding the extreme bull channel. So the same thing that I talked to you about on the SPY. So let me go ahead and demonstrate that for you. We're going to use the Fibonacci. I'm using the top of the body of the gap to the pivot high, and you guys can see that we're holding the 23.6. Here is another point of why I'm extremely bullish on this. So my sentiment on Qs is a little bit different. If you listen to me on SPY, I said that I was neutral until we could build a base above the upper edge. On this QQQ, I'm actually neutral to bullish, and the reason why I say that is because we have created the confirmation of an inside and up formation, but we're still rejecting here. You could look at both of these as being neutral until we see something above that yearly edge. Either way, I just wanted to point out that it is an inside and up formation and the color changes have moved. Of course, many traders in the market are focused in on the gap and probably also the separation between the EMA cloud and current price. There is some distance in there. A lot of times, what will happen if you study the cloud for a long period of time is that at some point prices do revert back to the EMA to find, if they're going to be supported. Also, they can come up and touch price without price having to come down if something like this happens. And I want you to just kind of slowly imagine this so you can understand. We spike up big. This will cause these to move up, okay, towards this formation in here, right in there. And then, let's say we make that high like I was talking about, and then we come down and then we touch it and we're right back to where we were. And then what happens is these EMAs just kind of go sideways for a bit. So that's one way. Don't think that you have to come down to hit these. Price actually can move up to bring these closer and then come down and go sideways. So that's the scenario that I'm looking for. But no matter how we cut this, this is your main level as far as trending methodology is concerned for this week for bulls to the upside. And far as again, that support that we're looking for, just keep your eyes on this. So it's a if this then that. If we get above that, I feel really good about the highs. If we get down here, I'm looking to go long, and anything between these levels, I'm looking to just come in here and do the same thing that we do with you every single day. Trade futures on the open, give you the SPX setup. I'm going to let my SPX bots take trades. And again, everyone keeps asking about the SPX bots. They are in beta phase at the moment. We brought in about 20 people, 20 investors to start trading them, give us our feedback, and then we will update you as time goes on. But they're looking awesome. They have a great win rate. I say we only have one bot going at the moment. It has a really great win rate. Things are going great, and I'm definitely liking what I see here. Okay. Now, if we get above that yearly edge, then things start to look different. Maybe I'll start to really add in on some long-term trades. Or if we were to drop down into that support, once again, that's where I want to be looking at adding into that dip. Okay. Let's go ahead and move on. We are going to take a look at the DXY or the dollar. And I started using Thinkorswim, and you have to put a dollar sign here and then DXY. And then I've been using this one here. And our chart is pretty much looks the same. So I don't have a change for you. If I come over here and go to, sorry, not the quarterly, we're going to go to the weekly. You can see our levels are working really well. What we're working with is price came down into demand. It bounced here into a bear channel. We expected it because it hit a bear channel to roll over. That's exactly what it did. It came back, made a higher low from the demand, and we're starting to see some compression, and that's what these yellow trendy turn signals are. But we're also caught here underneath the cloud. So again, I think we're just kind of stuck with the dollar. All right. But when the dollar starts to move up, typically the market will pull back a little bit, and vice versa. Okay. My major levels, again, will not change for this week, 102.7 and 97.95. I'm still expecting the lower zone if we break below 97, which puts me between 96 and 94. The overall trajectory is sideways to down. Let's go ahead and move on into the TNX or the 10-year treasury. How it relates to rates, the yield on the 10-year treasury is a key indicator of market expectations for interest rates and economic conditions. Okay, the zones are working well. That's all I can tell you. So when we come over here, in this case, I'm going to use, let's go ahead and use Trading View. Give me 1 second here to pull this up. And we're going to type in TNX. And you guys can see here that we are basically price is moving from zone to zone, inside and down and inside and up, all within here. I don't really have much to talk about when it comes to this because the zones are working so well. I'm pretty much neutral. I keep saying this is total speculation that I see this moving towards 3.8 into June, July. Just know that I've been saying this the whole entire year, and we did get pretty damn close. I mean, you could say that I already hit the level that I was looking at, but I was thinking in my mind, towards July timeframe, we could be back down here in this green zone, if you will. For now, caution is warranted in the overall market if we see above 5.0. Okay, let's go ahead and move on. Let's get into the skew. I also started to use Thinkorswim with Skew. I just easier for me since most of my broad market analysis is put right here. So these are the levels you guys can see. What this means is this is an indicator developed by the CBOE. It measures perceived tail risk in the S&P. So tail risk refers to the risk of extreme market movements, right? So they're either positive or negative. So how I use this in trading is that we adjust portfolios. So if you were to place a SPY chart behind the skew, what you would see is that when the market is going up, okay, and we're getting to extreme levels, your skew price is going to be extremely high. And this is letting us know that this might be an area where we want to buy protective options or reduce risk into exposure. And conversely, a low skew in this case, so these levels have been this way for almost 2 years. This, it used to be that the lows were way down here, okay, on the skew for many, 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 many years. And then that changed almost 2 years ago. Okay. And that's what I mean. They're typically down here. So this is for at least since, 2023. This has kind of been the low on the skew radar. And this is where, we're prompting or we may be looking to at least get exposure to the upside. Now you'll notice down here, I say risk for 5+ days. And if we were to get that extreme level that we have not seen in almost 2 years, I would be looking at getting skewed to the long side for, it says 30, but I'm talking like 90+ days out. So I'm buying the dip. This is where extreme fear would come in. And if you were to look at that SPY chart, basically what's happening is the SPY is way up here, and then we start to break down and you have that extreme fear down here, and all the things will start to make sense. Like we'll be coming into demand, the fear and greed will say extreme fear. There'll just be a lot of different things going on that would give me the confidence to look at a longer trade to the upside when these come into play. Okay. So again, guys, when we're up here, this is where I'm looking for insurance in the market, so put protection. There are other factors where I would buy puts, obviously. I actually have right now, because my portfolio is not long, I actually have ES future options trade on a debit spread just in case I'm, wrong because I have so much exposure to the upside and we are at that crucial level that I just went over with you guys. I think it's important, for me anyways, for my portfolio to have a little bit of protection on. Okay. All right. So let's go ahead and move on to the fear and greed index. Once again, I don't think I can. Let's go ahead and pull it over here. Here's the fear and greed. All right. So for this week, it's at 62. It actually dropped down 2 points. It was at 64. Not a significant change, but they're basically saying we're a bunch of greedy folks. Okay. That's what it comes down to. But we're also very close to neutral, so we're not swaying extreme, to the right hand side. And therefore, I believe because when I look at the skew, there is a level here that we could be breaking more to the upside and creating more greed, that this bad boy can move a little bit more to the right. Again, I'm not fully biased. I'm just totally neutral coming into this week and want to continue to use that level. Notice I keep saying this over and over so that I can just reiterate how important that level is for me. Now, one of my most important parts is getting into the ES futures, and then we'll finish it off with Bitcoin. And then I want to show you that yearly candle on the SPY, so don't go anywhere yet. And if you haven't hit the like button, please do so. I would really, really appreciate it. Again, this is not part of my service. I like to do this because I think looking at the overall big picture really helps with understanding the overall trend, but also a week to week um, analysis really helps me to get in the right mind frame of what to look for when we come in tonight on futures or tomorrow morning 30 minutes before the market. Okay, so let's go ahead and get started with our ES futures, and we're going to do a top down approach. All right, and what that means is I'm going to take you from the weekly chart. Okay, so we're going to click on ES here, open this up. We're going to look at the weekly. And a lot of times it'll look like the SPY, but not always. Okay, this one does. So you'll notice that on the Qs, I said we went inside and up. The ES and the SPY did not. So that's why I didn't give it a rating of like, neutral bullish. I just said neutral. We actually have what's called a double inside. So I'm looking at the body here of this candle. And then both these candles have closed inside that body so far. So we have what's called a double inside. The trendy yearly edge up here has been resistance until proven otherwise. It is the major level, which is around 6,000 for ES futures. I'm super bullish if we can get back above 59.40. We could not close over 59.30, which is what I was looking for Friday, in order to get that inside and up formation. Now, I gave you two levels in the SPX room and probably in the trendy room as well, of selling an iron condor. I think I took in, let me see here. I took in, I want to say it was like $4.50 or something like that. Credit, $420 of credit. Um, on selling this iron condor. I expected this level up here to be resistance, and I expected a level down below to be support. We broke down below that support. We came back up, and we closed perfectly. So I ended up taking almost all of my credit from that 420 bucks, and that worked really, really well. So it kind of is the same levels this week. Um, I need to see us above the yearly edge. I get really bullish and we get above 59.40. I'm not really too concerned, everyone, unless we start to break down below the 58.20. I know that that's quite some distance away. You're looking at a good 100 points or so. So it doesn't mean that I wouldn't get negative or into puts. As a reminder, I'm in an ES futures hedge. So I'll just rely on that. And that actually pays me really nicely if that were to hit. Um, and so I feel really comfortable that I don't need to get overly bearish, is what I'm saying, even though I'm net long because I have a nice hedge on. Okay. But again, this is the level for me where I'd start getting a little worried. And then I'm extremely happy if we get above 6,000. Okay. Let's go ahead and now move to our next time frame, which is going to be the daily. You'll notice I have triggers on here. These triggers work really well for me. I have a resistance trigger. You can see here that I'm using the upper weekly edge and I'm using the yearly edge, pretty much what we talked about in the SPY. And then I moved this trigger here on the short up just a tad. Again, please listen. These aren't blind triggers. There are certain things I'm looking for on the intraday, whether or not I'm going to follow these. They worked well last week. They've worked many, many times over the years. This short trigger is actually using volume profile. There's a volume ledge there, and not any formations. As you guys can see, there's nothing really going on over here, but there is a volume ledge there. So I'd be looking out for that area to reject. This is still resistance until proven otherwise. And to the downside, we have the lower weekly edge where I have my first trigger. You can see that it's also confluent with that 200 SMA. Okay, my next trigger down here is pretty much lined up with a gap fill. I'm not a huge fan of like gap fill buys. Sometimes we get a bounce, but a lot of times what I'll notice is because so many people are paying attention at gap fills that they'll flush them. So you could get your butt handed to you. So again, I'm just letting you know where this one is, but not necessarily will it, work. And then I have some further below as well. Short trigger, I want to talk about this real quick. Again, this is just a volume ledge. Some people love using volume. I don't ever use volume, but I did on this one because I'm not seeing any formations over here that are really significant or anything like that. All right. Um, I'm overall bullish, and like I said, if we reclaim this, I'm thinking, 90 plus probability we take out the previous highs. Now, timing is the variable. I'm not and cannot predict the future. This is not, something I'm telling you to go buy or go short. It's something that I use technically to help me in my trading. Okay. Let's go ahead and move on from the weekly to the daily to the 4 hour. We're using the same levels we used last week. You guys can see how beautiful they worked. We came into support, that worked well. We came into the trendy edge, which was resistance, that worked very well. And that leaves us at price, which is pretty much in the middle, if you will, when you look at, the high here, and then the lows down here to the lower left, sorry, right there. You're pretty much in the middle. And what they say is when you're in the middle, don't diddle. Don't diddle in the middle, right? So I'm not telling you not to do anything. Of course, we have an awesome strategy that we use every single morning to help, hundreds and hundreds of you guys to make money very quickly using the PMZ strategy and so forth. Liking that. Inverted head and shoulders, been talking about this for several weeks now. We're seeing that all over the place. That worked out there. This looks more like a little head and shoulders. So we could pop up on tonight's futures open. I don't know. It's not a guarantee, but this could happen. And then we kind of roll back over. Again, same thing as SPY. Need to see us above that trendy edge, folks. Or if we get lower, I'll be taking my hedge off and looking to get long in the futures, SPX, stuff like that. Okay. Let's go ahead and now move over to the NASDAQ. So same thing, we're going to go with the top-down approach. This is what it looks like. Beautiful colors here, red, white, and green. We're above the cloud. We hit the sell zone. We hit the trendy edge. We pull back. It's not much. It's not like this beautiful inside and up formation, but it is technically, for me, an inside and up formation. But once again, we need to get over that level, which is about 21,000. Let's just call it 21,770. All right. Anything below 20,940, then I'm concerned that we could continue to pull back. Okay. So let's just, be sure that all is, that your guard is up if we start to break down below that level. Okay. All right. So next thing we're going to do here is roll into the daily. And you guys can see here that the cloud is holding. We came down into last week, we actually came down into our buy trigger, which was right around this area. Got a really nice buy trigger. It moved to the upside. And also, this short trigger was right here exactly where we pulled back. So, again, the levels work great, but they're not like this blind level that we just go, okay, yeah, let's short or go long. But they did work really well. These are our new levels for this week. I'm using the lower weekly edge. And then I have another level down here. You guys can see that, and it's confluent with the 200 SMA, which could work very, very well. Okay. Next thing that I want to be looking at is going into the smaller time frame, which is your 4 hour. We have, and once again, I didn't change this one. We came into support. It worked really well. We pushed up into the yearly edge. We broke down. We created a pivot up here, which therefore is an inside and down formation. These are going to be resistance. So basically using last week's high and the trendy edge, you could see resistance in this area. Be cautious if we move up into these levels. As always, folks, the ES and the NASDAQ also has an intraday chart that we, and this one has not been made up yet. It'll be made up in the morning before we get started, but we'll have our intraday setup for the day. All right, so keep that in mind. So all the other charts I just showed you is for, they're all very important. It's important to understand all time frames, but the intraday strategy is where we come in, we'll talk about what's happened, but then we know exactly where we want to execute, where we want to trim and stuff like that. Okay. Let's go ahead and finish this off, well, with Bitcoin, and then we'll go to the annual or the yearly candle on the SPY and the ES after Bitcoin. So Bitcoin, again, I have a portfolio that I call my grandkids account. And I think that it's awesome because like I'm not putting a lot of emphasis on it, and it's a really nice teaching lesson for a lot of folks who might struggle from an intraday or just like a day trading venture. If you're having a hard time, I like to take some of my money and I push it into this account called the grandkids account, where I just buy the extreme lows and really try not to pay too much attention. And the Bitcoin has worked out really well. I put together a 2025 trajectory, if you will, or projection of where I believe Bitcoin was going. And so far, it's working out really, really well. Again, we still have 6 months. I brought this up last time. It is an inside and up formation. It looks beautiful. We got above the trendy edge. And this is where I keep saying, like, I feel like a lot of traders will use Bitcoin to kind of understand in the market if they want to be, risk on or risk off. Is Bitcoin showing us, where the market wants to go? And you'll hear these kind of comments with a lot of traders, and I actually struggle with it because I don't think Bitcoin tells us where the market's going. I think what it what it tells me, being transparent, is where I'd like for the market to be going, right? So is it something I want, or is it something that's actually showing us? And I'm not here to tell you that, you know, Bitcoin is leading us where we're going. I just think that if you're watching formations, you're watching Fibonacci's, you're putting all this stuff together, then it can paint a picture for you. Like, for example, as soon as we went inside and up here, I felt really confident that we would continue to get to 101 by 113. And that's what I gave you several weeks ago. We hit those targets. Now, what I'm telling you is that the quarter still has 29 days left in it, all right, which is quite some time. Yes, this is an inside and up, but it could come all the way back down. But as long as we stay above this level here, which is around 95,200, then I am stay extremely bullish. Okay, even if it comes all the way down there, as long as we hold that by the end of the quarter, I'm happy. Remember, this candle has 29 days before we know what it actually looks like. Now I bought the dip over, several times this year. I also bought some of the highs, and then when it came down, I bought some of the lows. So it's been working out. And my 2025 projection puts us at 130, 138 to 167. And we are on trajectory to see that. But once again, any kind of sudden big deep pullback that would maybe break under this 46 level would change things up in a hurry. But so far, things look pretty good. Let's go to the weekly. The weekly is important because it closed as an inside week. And just like we learn, this could go inside and down. Okay, so that's what I'd be looking for. So that trigger to be concerned about would be under about 104. I would just say 104,800, and let's just say 800. And then if we were start to bid above 108, let's call it 108,000, then things look really good. So those are the two major levels for this week. If you're like me, my biggest concentration is right here on the bigger picture. As a reminder, this week is my lesson on leaps, okay, and how I like to leap trade. So please, please be there. It's Thursday, and if you haven't signed up yet, you can reach out to support here at Simpler. Also, go to our dashboard. You'll see the classes where you can sign up if you're not. And if you are, we will get started at 1 o'clock Central Time on Thursday. All right. So, can't wait to see you guys there. Let's now finish off this with SPY, and we're going to go to a yearly candle. Okay, so right here, and I just want to show you guys what I was talking about. So we have this year, right here in 2023, 2024, 2025, and we're at a midpoint. So I just wanted to talk about it. Continuation, if you look up on Google, I think it's three white soldiers. The formation would look like this by the end of this year. So you have this 2023, 24, and 25. These are really bullish trajectory. It's kind of what we're on at the moment, and it could play out. But I also said what we could see is we have these two, and because we have 6 more months now, we have no idea. It could end up looking something like this, where we pop and then we close inside. So something like this. Okay, so it's an inside year. All right, so these are the two scenarios that are going to happen. It's either going to look like this, super bullish, or we're going to be super bullish at some point and then pull all the way back and close on the inside of this year. Again, we got 6 months to go, guys, but just wanted to show you what I'm looking at so far. And I gave you that number, I think it was like 586, and that's kind of the over under for this idea playing out. So as long as we're above 586, we're on that trajectory. If we're under 586, we're on the on the trajectory of closing on the inside for the year. All right. And again, a lot of things are going to change before the end of the year. So really appreciate you all. Have an amazing day. Don't forget to hit that like button, and we'll see you 30 minutes before the market opens tomorrow.